The recent developments concerning both NIO and KANDI electric vehicles will surprise you. Is this a positive sign for this Chinese auto industry? Meanwhile, the recent announcement by the US government to delist any foreign companies who do not comply with accounting requirements stipulated by US Securities and Exchange Commission raises concern. And then, big question. Is this law a deliberate target against Chinese companies? What is the impact of the regulation on both NIO and KANDI auto industry? Will these companies be delisted? Well, stay with me. Let me tell you about my findings. And then let me start by talking about EV batteries. Thereafter, I will discuss the effect of delisting. And then perhaps you want to know why battery swap tech. Well, you see, battery pack is one of the most expensive components of an electric car. Therefore, auto industry must first address the issue of battery cost. And then if and when the strategy is well implemented, it will cut down the price of their vehicles and attract buyers. Again, by nature, China has abundance of lithium, a key component in the production of batteries for EV, and then NIO and KANDI are both Chinese auto manufacturers. So, what does it mean, you want to ask me? Well, it is obvious. The availability of ample lithium is a catalyst that is helping China auto industry to be able to keep its battery production cost at a lower rate than most developed countries all over the globe. In effect, both NIO and KANDI will remain competitive. And if you'd like to know, KANDI is NIO's biggest competitor. And to know more about the details of my reasons, please check my video title, KANDI EV, NIO's biggest competitor. You will see the clip at the end of this presentation. Okay, you see, a reliable battery concept is a key phenomenon to all electric vehicles. It enhances robust growth and will boost sales. Consequently, this known fact encourage or compel, if you like, NIO management to initiate the bus as a service concept. The bus is a significant milestone for the company. I have explained the benefit of this strategy in my video titled NIO Battery Swap, Deal or No Deal. You'll see the clip at the end of this video. Nonetheless, let me explain the cost benefit of the scheme. You see, customer will save $10,000, which is 70,000 RMB, up to 20% of the vehicle price with bus option. The bus option is subscription based, costing $145 per month. That is 980 RMB. At these prices, the bus options is likely to be the preferred choice, since customer can pay for almost 6 years of bus with the savings. Similarly, KANDI management understood the potential of battery swap technology and have also embedded battery swap tech into all their vehicles. And recently, the chairman stated, and I quote, chairman of KANDI stated, and I quote, "We are confident that our battery swap businesses can grow rapidly due to our years of experience in smart battery exchange technology, further supported by China national policy to promote vehicle battery separation swapping for electric vehicles, end quote. Okay, let us examine the performance of both companies over the years. You see, according to data, both stocks have delivered decent returns over the past years. While KANDI gained 154% over this period, NIO returned 578% in terms of past 6 month performance. And then perhaps you want to ask me whether these figures represent their performance. Well, in my answer is yes. Why? Because I have both stocks in my portfolio and I've witnessed the growth as reflected in the price action. Again, in the recent development. On November 4th, KANDI received authorization from United States Environmental Policy Agency for 2 of its EV models, clearing them for commercial sale in the country. What is the implication of this news? It means expansion for KANDI Auto, and this action will translate and boost sales of KANDI, hence more revenue. Again, KANDI fully owned Zhejiang Smart Battery Swap Tech Company Limited and about to launch its IPO on the Shanghai Stock Exchange. Do you want to know the impact of this development? Okay, stay with me. You see, the demand for vehicles battery separation swap is rising, and because there are several EV autos in China which will need and require the services of this battery swap tech, and it will eventually translate into revenue for KANDI Auto. Again, let us look at the numbers, the past and expected performance. Well, since making its debut, its market debut in 2018, NIO revenue grew by 21.5% from the same period last year. This compared to KANDI revenue growth at compound annual growth rate of 11.3% over the past years. Analysts expect NIO revenue to grow by 79.3% next year, while KANDI revenue is expected to rise to say 76.7% next year. Let us look at profitability. NIO's trailing 12-month revenue is 9.78 times what KANDI generates. However, KANDI is more profitable with gross margin of 20.2% compared to NIO negative values. Let's have a look at valuation. In terms of trailing 12-month price to sales, NIO is currently trading at 31.14 times, which is now around 38% higher than KANDI, which is currently trading at just 3 times. What does it mean? NIO is more expensive in terms of trailing 12-month EV sales. Okay, let me explain, or rather let me break it down. What is price to sales, what it means. It means if you have NIO in your portfolio, if you own the stock, you are paying 31.14 times, which is now around 38% per dollar of sales for the stock. While with KANDI, you'll be paying just 3 times per dollar of sales for the stocks, which means NIO is more expensive than KANDI. Well, that said, analysts have argued that though KANDI is more avoidable stock, NIO impressive financial performance and then market reach justify its premium valuation. Okay, the big question, delisting. The question is, are these two companies likely to be delisted? More so because Chinese law prevent Chinese audit people from leaving China. Well, in my opinion, both companies will comply with US regulators and make their book available for auditing. And why did I think so? Well, you see, much is at stake. Kandi Auto has gained ground in the US and sales will soon boom. What with Texas Commission on Environmental Quality will now offer 2,500 rebate for buyers. You see, purchasing each of Kandi electric vehicles being offered by its US subsidiary. While new management have invested millions of dollars, we're talking of millions of dollars here, and still pumping money for research and the development of new cars, courtesy Tencent, IFA, and then Chinese government. Consequently, the stock is booming and is very popular by the day in China and the US. And then institutions like JP Morgan and Morgan Stanley have endorsed and have invested lots of money in the company. And thousands of millennial, young generation, if you like, are buying the stocks by the day. Why so many people believe it could overtake Tesla in sales and revenue within a short period. So, how do you benefit from all this as an investor? Well, I will invest in both companies and then watch my investment grows. I will go the route of dollar cost averaging. Please do your research. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.